Hi, and welcome to this event, where we today has the pleasure to present Mdundo. To help me through this presentation, I'm joined by Jesper Drexler, Chairman of the Board and Co-founder, and Martin Møller, CEO. Today's event, we will dig into the numbers of the Q2 2021 report, look at the guidance, and take a deeper dive into the numbers and the announcement that they made this morning. Housekeeping, you can ask questions on the right side. I will try and see if it fits into the presentation and ask them there, but no worry if it's not asked through the presentation. We will pick up all the questions in the end, and I will make sure that your question will be answered. But I think, Martin, you can take over from here and start presenting the numbers.
Thank you so much, Michael, and thank you so much, everyone, for joining us this morning for a review of the report that we released this morning for the first half of our financial year. So, without further ado, I want to jump straight into a summary of the numbers. I think so. There we go. Yeah, so as announced, we have reached 7 million users in December 2020. If we look at our sort of key guidance numbers, we have here on the left-hand side our monthly active user performance, and on the right-hand side our revenue performance for the half year. If we start looking at users, we had a 39% growth from June to December. We have, in the period, had a very aggressive expansion of the team to really focus, to really foster future growth, both within our key markets, but also across the continent as a whole, to prepare for future growth as well. We did also in the announcement announce that we are expecting a flat to a slight decline in our monthly active users in this Q3 we are in right now. This is primarily because we are running a number of different tests and different trials, and as we are doing that, slowing down a little bit on our marketing spend to really make sure we optimize optimize our search engine and our marketing channels before we sort of give it a little bit more of a go to on the marketing channel. We are still, as advised when for the last period, expecting to reach 9 million monthly active users by June this year, and doubling that to 18 million monthly active users by June 2022. On the revenue side, as you can see here, we've seen quite an increase from the same period last year, with a 51% growth from comparison to the same period last year. The main thing that's worth that you really should take away from this is that we have ramped up and started our commercial activities in a number of new territories: Tanzania, Nigeria, and Ghana. We did that in November 2020, where we launched our advertisement products across those three markets, increasing from just Kenya, which was the only commercial market that we had a commercial team in before. So that's sort of the main activity within the sales and commercial. On top of that, though, we do have an announcement of a partnership with Vodacom Tanzania. It was announced in the early January 2021, and that is also something that will contribute to the revenues of the business. Generally speaking, as well as on the user guidance, when we look at revenue, we are expecting revenues to hit the forecast that we had put out before, with the expected values of 4.1 million Danish kroner for the financial year 2021. With that summary, I just want to do a brief reintroduction to our business, to just give you an overview of our focus areas. Mdundo is an African music service. It's available through mobile web, so a website located at mdundo.com, and it's also available through an Android app. As of December, as I just announced this morning, we had 7 million monthly active users. Those 7 million are downloading 32 million downloads every single month from our platform, and we are currently actively focusing on 15 African countries. The commercial model around let's not skip this one. The strategy moving forward is very much that our focus, our current markets, as of the beginning of this financial year, was that we had a number of markets where we're in stage 1, which is what we call music acquisition, where we go out to a market and we acquire music into our service from that particular market. The key here is that in every market across Africa, a large proportion of the music that's being listened to is domestic catalog. So it's very key for us to have that catalog in order to build the music service within that market. We are currently transforming a number of those markets into stage 2, which is a marketing focus, where we are aggressively building a user base in those markets. And stage 3, which is the commercial focus, is where we really moved in the last 3 months, going from focusing on Kenya, Tanzania, to including Nigeria and Ghana and Tanzania as well. So that's really the strategy in terms of expansion and how we are rolling out the service and business across sub-Saharan Africa. The commercial model around Mdundo and our business model is really threefold. So as a business, we have historically had a really strong focus on freemium, which is basically a free-to-use service where you can download, stream all the music free of charge. It's a model that's commercially very successful in many emerging markets, Asia, India, Latin America, where you'll find that there's a number of cases of the freemium business model really working within the entertainment and music space, where it's heavily about building massive user bases, as we do have a really wide and big populations in these markets, and monetizing it through advertisement. Then we do have a premium model, and that is currently not a strong focus for us, but we do have it available on our platform. It's a model that has been very successful in the Western world. So Europe and the US, premium has really been the way to go, but in many emerging markets has not been the key model to sort of structure an entertainment content music platform. And last but not least, the telecommunication business model, which is heavily based on bundling our product together with telecommunication partners. Basically, that for telecommunication partners, both globally, really, this is a model that has been successful. The telecommunication industry is looking for services that helps them attract a subscriber base to their network.
I think he just cut out, unfortunately. I don't know whether, Jesper, can you take over from here?
Sure, can. Very happy to do. I'm sure Martin will be in a second. Oops. Did I do that?
In a short while, yeah.
Yeah, sure. No, what Martin was explaining that really the freemium model and partnering up with telcos is the way to go in the African continent, which is also a proven business model especially from Asia. Oh, Martin, you're back in again?
Yes, I'm back. Sorry about that.
Perfect.
I was kicked off for a second.
No problem.
Where did you lose me, Jesper?
You were talking about the telcos.
All right. Yes. No. So it's really a model that, from a telco perspective, and what we're seeing from the telcos across emerging markets is that bundling up with content and music services really helps them drive user base, but also drives average revenue per user for the telcos in the different markets. And so for us, it's an obvious opportunity to bundle together with them and use them as a billing and a driving a user base sort of mechanism. I want to jump a little bit more into details with the user numbers that I mentioned in the beginning. So we have reached 7 million monthly active users for in December 2020. We are seeing that the fastest growing region is West Africa, but we are seeing most of the other regions, both our sort of foothold in East Africa, but also Southern and Central Africa is experiencing a good growth. And West Africa is a very, very interesting region for us. Nigeria and Ghana are both very big countries on the continent, both commercially and in terms of population. So it's been a really key focus for us to focus on growth in these markets. And as I mentioned in the beginning, we do also expect from this quarter to see a bit more of a flat growth. And I just wanted to elaborate a bit more on that. And so the main reason really is that we as a business are constantly optimizing and testing both different marketing strategies and different user flows. And we are as we are doing that and as we are optimizing on those channels, we are slowing down a little bit on our marketing engine. And so for that reason, we do expect to see a relatively flat development within the quarter we are coming in now, and sort of preparing preparing to optimize these processes before we give it a bit more power on the advertisement engine, only when we actually have the models right and have tested the different initiatives that we are currently working on. So that's something to take away also from this slide. But that being said, we are completely expecting to reach the targets that we have for the period. So 9 million by June 2021 and 18 million by June 2022, sort of building on the growth that we are already experiencing at this moment. I would like to sort of just dig into the revenue side of the business a little bit more as well. We are focusing heavily on freemium, and the primary revenue stream is advertisement on our platform. As I mentioned earlier on, we have launched our advertisement sales teams in Tanzania, Nigeria, and Ghana. We did the launch together with hosting an event in each countries about the future of audience engagement, where we had a number of key clients, both in the panel but also attending this seminar. We had a total of 900 potential advertisers from across these 4 markets attending those 4 webinars. In terms of orders, we have grown from 20 orders in the same period last year to 27 this year, whereas 6 of them are from these 3 new markets I mentioned. And some of the brands that are really big brands and Pan-African brands that we are working with within the period is Coca-Cola, Standard Chartered Bank, Diageo, and also 9 Mobile, which are all big established companies from across the region. We did also announce a partnership with Vodacom in Tanzania that we expect to contribute to revenues in this quarter as well. And that's obviously not advertisement funded. That's from a bundling perspective. We had a whole session on this earlier in January, and a deep dive on that is available online if you want to understand more the model around there. But that's something that we are really focusing on from a strategy perspective as well. If we look at the overall expectations moving forward, both in terms of users and revenue, we are very much on track. On the users, we're looking at 9 million in June this year, 18 million monthly active users in June and next year, which will be a doubling year on year for those 2 that period. If we look at revenue and EBITDA and the sort of the financial prospect, we are on track for realizing our revenues as well. But if you do look at the bottom line, you compare it to the numbers we presented this morning, you will see that we've only spent around 3 million Danish at this point, or we're only down 3 million at this point. And we have a budget for 13 million. So we are expecting a number of activities to pick up in this quarter to support the strategy of the overall business. With that, I want to hand over to Jesper to just touch a little bit on valuation and how that sort of is compared with the numbers that we pulled out this morning. Over to you, Jesper.
Thank you very much, Martin. Thanks for the presentation. I just want to spend a few minutes on a peer valuation. It's a peer valuation that we did when we went IPO and are following up on. Because what is Mdundo? Is it a cash flow machine, or is it a user case? It's definitely a user case, building the leading Pan-African music business. And then it's, from an investor perspective, of course, very relevant to see what would peer valuations be in similar businesses around the world. And what you can see from this slide is that the actual value in transaction on public markets for music services across the world, it varies from $10 to around $115 per monthly active user. On the higher side, you do have services like Spotify, Tidal, focused on the Western world. Their monthly active users is valued around $115, $120 per user. And in the lower end, you have, for instance, a service like JioSavan, an Indian service, which is quite similar to Mdundo, which was sold in a transaction a couple of years ago at a value of $10 per active user. If we look at what is the valuation of Mdundo's active users at the moment, then we currently have a valuation per monthly active user of around $1.84. If we believe in the value if we see the expectation for 2022, where we expect to have 18 million active users, we're down to a valuation of $0.72 per active user, or a gap up to a JioSavan valuation of 14x. What we put in the footnote is as well, if we look at the enterprise value of the business, then it's actually much lower, because right now Mdundo has around 34 million Danish kroner in cash in the bank. And from an enterprise valuation perspective, you would have to deduct that from the market cap. And that way you would have a valuation per active user much lower, actually around $1 right now. And why is it relevant to look at a peer like JioSavan? Well, basically, it was an Indian music service, and music services in Asia is run much like in Africa, with a focus on freemium models. You make your money from advertising or from partnerships with telcos. It had 100 million active users when it was traded at $1 billion. And from a macro perspective, if you look at sub-Saharan Africa, well, you have an average GDP per capita of around $1,600, whereas in India it's around 2,100. So not that big a gap. But if you look at Mdundo's commercial focus markets, it's actually on par with the GDP per capita in India. So we do believe it's a fairly similar case. So now for us, it's about growth, and therefore it's also important that we do have a good cash position. So we do have the money to invest in growth without going in the markets very soon. And is there any examples of tech acquisitions in Africa? Well, actually there is. One of the biggest and probably most well-known is Jumia, which is listed on New York Stock Exchange. Jumia is like Amazon for Africa. It's valued more than $4 billion. It says 3, but it's actually gone up quite a lot. It's up to 25x this year. We did have Network International Holdings that was sold to GPO Group. Paystack was just acquired by Stripe, the payment service, etc. So it's actually a continent where we do see quite a lot of transactions in the tech space. That was not the case 5 years ago, but the market is maturing more and more. From an investment perspective, of course, it's up to individual investors what is a fair return to risk. But we do believe, looking at peers, that there's a massive upside in the Mdundo share. I think this takes us to a Q&A session, Martin and Michael.
Yes, it does. Thank you very much, Jesper. Yes, it does. we can.
I'm very sorry. It's not just in Africa we have a bad internet connection today. Yeah, let's jump into to the question. Thank you for the presentation. There's a question here, or there's a lot of questions. And one of them is: you expect a slight decline. You're also going down on your marketing side, and I can see you have saved a little bit of cash to pour into the next coming quarters. But the question is the retention. You know, you run a freemium model. Do you have problems with retention? Is that the explanation, or can you elaborate a little bit on the retention? You know, your customer coming in, do they come back, or do you always get new customers in? I think that's the question.
No, of course. I think it's a really good question, and I think that it definitely highlights something I maybe didn't explain clearly enough. So thank you so much. So basically, when we talk about marketing, Mdundo does acquire most of our users through organic channels. So most of it comes through Google search. So a user across Africa is searching for a big artist, searching for a big song, searching for a kind of music, and organically they end up on Mdundo, not paid ads. So we're not paying for that customer, but they come in organically. And so when I say marketing spend and marketing efforts, it's actually primarily organic efforts. So basically optimizing our own SEO, optimizing how we are ranking the different pages on Google, and that obviously can have, when you're testing such things, it can have both a negative and positive implications. So you're sort of starting from point zero and trying to change different things to see if that impacts your ranking on Google. And going through those tests, some of them we might learn will not work, and some of them will learn will work. And those that will not work will negatively impact our SEO, and therefore you'll see a decline in users for that experiment. So it's not actually as much to do with retention in this case that it has with how do we actually acquire users. And the reality is that maybe unlike many businesses or online businesses in the Western world, we actually don't acquire a lot of users from paid. We acquire a lot of users from organic search traffic. So our focus is therefore a lot more on optimizing that, ensuring that we have content and investing in content and catalog on our service that is relevant for the users, and thereby drive new users into the traffic, into the platform through search. But thank you very much for that. That was really good to get clarified.
So when you first have gotten them, it's really a music catalog who keeps them there, and you know, that's also a low cost. You know, one of the next questions, I don't know whether you're ready for it, because you know, but you wish to indicate a value of $1 to $10 of a user, but what does it actually cost to come in? I think you already elaborated a little bit on it, that you actually don't spend that much of your cost to get a customer. It's not an extremely expensive acquisition of customers. I don't know whether you want to put a number on it, but can you elaborate a little bit about how cheap is the acquisition cost actually for a customer?
Yeah, well, I'll better state the numbers that are already in materials, and we do have a customer acquisition number in the company profile that we released together when we were announcing the IPO. And to be completely honest, I can't remember it off head what was in that document, but it is already there, and it's public information. So we do have it there. But as you are saying, it's not a paid customer in the sense that we are buying a particular user into the platform the same way you'll see when you're buying app installs or sort of other kind of install campaigns. It's much more a cost of us growing our catalog and growing our catalog across the continent, and that catalog then attracts users into our service.
Perfect. So without elaborating, you can say it's well below $1.
Oh yeah, also well below 0.1.
Good. And there's also an ask when is a user profitable. You know, I think that's maybe it's a hard answer to come with that because that depends on which market you are on, where the users come in. I don't know whether you can elaborate a little bit on it, time frame wise. How long does it take to make a customer profitable?
So we are, as you're saying, it does depend a lot on the different customers. So I think one dynamic that is very different from emerging markets, and Africa not being an exception in comparison to the Western world, is that when you talk about user segments or customer segments, there's a lot more extremes in one or the other end than what you'll find in the Western world. Like a lower class or lower income bracket customer is significantly different from an upper class or upper income sort of a customer. So that it really depends a lot from customer to customer what we are seeing as a profitable customer.
And maybe there's a question here for Jesper. You know, the massive upside possibility you're elaborating here, the missing ability of the market to access that to an African customer. You know, you invest in Africa. I think he's giving you a leading question, but can you elaborate a little bit on your viewpoints on this?
Yeah, I can. I just want to elaborate a little bit on the user acquisition cost first, because as Martin said, it's very, very low, and as Martin said, it's also way below $0.1 US. But it's very important to understand that the reason the acquisition cost is that low is because we have an appealing product. Because the way we're thinking about the business is that we need to have the best music service across Africa, and therefore it's fairly easy and cheap to acquire customers. And therefore we do spend a lot of money having the right content, having the right service there, and then the acquisition cost itself is fairly low. But it's not the same thing as you could start a new app and get a few songs, and then you could acquire customers at a very low retention rate. It's because we've done a lot of preparation work. That's just the clarification. Yeah, why does the market not incalculate the upside in the share? Well, I'm not sure if we are the right people to answer that. I mean, our focus is really on fulfilling the strategy, make sure that we develop the leading Pan-African music service, we deliver what we have promised the market, and sometimes hopefully over-deliver. How the market values is, it's not really for me to explain, because I think, I mean,
that's fair, Jesper. That's fair. Yeah. You know, I was more, you know, your viewpoint on investing in Africa. You do it as a reason because you can actually see some value being created down there in that region, and of course it takes time to make people understand that. But but I can try and give you a few some market aspects, because it's correct. I've been investing in the African tech market for the last 5 years, more or less, and there's no doubt the market is maturing more and more and more. And as I said, when we looked at peer cases, the last 2 years, we have really started seeing acquisitions. The fact that Stripe went in and bought Paystack, one of the payment services in Africa, for plus $200 million, is something we wouldn't have expected 5 years ago. The fact that Jumia listed on New York Stock Exchange and now trading at a valuation, I think, above $5 billion, really is skyrocketing. The share price went from 2.5 to now trading around 60 in the last 12 months. Is something we wouldn't have seen 5 years ago. So the market is maturing a lot. There's no doubt about that. So I think in general, the stock markets are really really starting to understand the potential in the African market. On the specific Mdundo case, I mean, our focus is really on making sure that we deliver and really deliver the leading case for Pan-African music service, and that we invest in the right focus areas and spend our money in a wise way. Perfect. And there's also a question about the volatility in your numbers. You know, historically, maybe you can give a little bit of historical perspective. It's not only the marketing cost, it's also the search engine optimization. But if you can give a little bit historical, it's nothing. Is it unusual for you, this, or is it something you have experienced through your lifetime as a company? Maybe if you can give something on that, Martin.
Yeah, of course. So it is something that we do experience in the past as well. You do always want to be ahead of the pack. You want to constantly test and try different things. And when it comes to search engine, it's a constantly moving engine. Like Google changes their algorithms on a daily basis. So you want to make sure that you constantly try and optimize to make sure that you are appearing as many places as possible that is relevant for your service and for the customers. So historically speaking, it is not unusual for us to go through these periods where we are optimizing on different things and trying different things, and to make sure that we are building we are preparing for the future growth to come, and to make sure that the only really way to try and make sure that we have made the right decisions and optimize the right places is to try it out. And there is not really any sort of a sandbox or anything else where you can do these experiments. So that's very much how it is, and that is a very strong. There is a nature of the business as well.
So that's why one of the reasons why you're actually comfortable by keeping it and expecting if you increase the marketing spend, and when you normally have search engine optimized, you see normally a spike.
Yes, very much. Like when we find the right components, then we'll expect to continue the growth that we've seen and has already been doing quite significantly in the last 6 months, and to continue. That is very much the reason why.
I think, unfortunately, we run out of time. Thank you very much for the questions, and thank you for the answers from you and going through the presentation, Jesper and Martin, and thank you to the viewers.
Thank you.
Thank you.